students, today in this session we are going to discuss Unit 4, that is tax deducted at source and tax collected at source, which is simply called as TDS and TCS. What is this TDS and TCS? Both are the methods of making the payment of tax. So, let me first give an introduction to TDS here. Now, TDS, as the name indicates here, it is tax which is being deducted at source in order to collect the tax from the very source of income. Now, as per this concept here, a person, that is a deductor. Now, who is a deductor here? The recipient is a deductor here who makes the payment of the GST, and where the liability falls on the recipient here to make the payment of GST here, and that falls to another person, that is deductee, that is the supplier is a deductee. As you all know that in any supply transaction you have two parties, that is the supplier as well as the recipient here. So, in case of the TDS, the supplier is the deductee and the recipient is the deductor here. So, the deductor here, he will be liable to make the payment of specified nature to any other person, that is deductee XYZ, and he shall deduct the tax at source, and after deducting the tax here, he will remit that amount into the account of central government. Moving on to the conceptual meaning of TDS. What is TDS? As the name itself indicates, it is popularly known as tax deducted at source, which is the income tax which is being reduced from the money paid at the time of making specified payments such as rent, commission, fees, salary, etc. by the person who are making such payments. Now, who will make this TDS? Usually the person who is receiving the income, he is liable to make the or pay the income tax. But the government, with the help of TDS provisions, it ensures that the income tax here is deducted in advance from the payments what is being made by you. Continuing the conceptual meaning here, so in case of the supply transaction, that is the recipient of income here, he receives the net income after reducing the TDS here, and then that will add the gross amount to his income, and that amount of TDS which has been adjusted or which has been deducted from the net payment here is adjusted against his final tax liability, and the recipient here, he takes credit for the amount already which has been deducted and paid on his behalf. Now, what are the conditions for the deduction of TDS in GST? Now, the conditions for the deduction of TDS in GST, which is prescribed under CGST Act of 2017, is as follows. Now, the first condition is, in GST, the deduction of TDS is to be made on a payment made or credited to a supplier on the taxable goods and services, or both, when the total contract value of such supply exceeds rupees 2.5 lakhs. The second condition is, now once the work order or the purchase order worth a value exceeding rupees 2.5 lakhs is issued by the government here, then the TDS will be deducted. The third important condition is, in GST deduction of TDS or in GST, the deduction of TDS, it will be applicable on the value of the invoice for which the payment is made after excluding all the different taxes or the cess which forms the components of GST. Moving on to, who is liable to deduct the TDS? As per the provisions of the GST law, the following persons are mandatorily required to deduct the TDS. 1. Any department or the establishment of the central government or the state government, local authority, government agencies, then any such persons or the category of persons which are notified by the government as per the recommendations which have been made by the GST Council. So, these are the persons who are liable to deduct TDS. This particular slide talks about the TDS rate chart, how the TDS is being deducted under various heads of income. Moving on to what are the key points that has to be remembered while deducting the TDS by the concerned authorities or the establishments or the governments. Now, the key points or what we call as the provisions here is being given as per section 15 of the CGST Act of 2017. The first key point is tax deductor. Who is a tax deductor here? Now, tax deductor here is the person who is liable to pay the tax here. Second, supply transaction. Now, supply transaction here, it becomes very important key point because based on the type of the supply, accordingly the TDS will be deducted. If it is interstate supply transaction or intrastate supply transaction. The third key point is standard rate of deduction. Now, the rate of deduction is notified by the government where it ranges from 1% to 2%. The next important key point is applicability of TDS. The government has notified certain provisions under section 51 of CGST Act 2017 with regard to applicability of TDS. In case the supplier, the location of the supplier as well as the place is in the same state, then TDS is applicable. Suppose say if they are in different state, then TDS is not up, there is no TDS if it is in different states. Then comes another important key point, deposit of TDS with the government. Now, once the TDS is calculated, whatever the TDS amount is accumulated in the GSTN portal, that will be deposited with the government treasury. And the last key point is TDS certificate. Once the TDS is being deducted, in acknowledgement for the TDS, a TDS certificate will be issued. Now, moving on to the 4 basic issues that is encountered in TDS. So, the following are the 4 basic issues. 1. Deduction of TDS. 2. Obtaining the GST registration number online. 3. Depositing the deducted TDS. 4. Furnishing the deduction or the relevant payment details while uploading the returns online and thereby issue the certificate of deduction. So, let me now explain in detail the deduction of TDS. Now, the slide shows the TDS on various incomes as taken as example here. For example, savings bank account interest. So, the rate of TDS is 10% and there is a threshold limit here for senior citizens here which has been fixed. So, likewise, we have TDS on services also like insurance commission, dividend here. So, this chart basically explains the issues with regard to the deduction of the TDS, illustrating and substantiating the first issue, that is deduction of TDS. Moving on to the second issue, obtaining the GST registration number. As you all know that all the payments of the GST, which is an indirect tax, is online, which has been maintained by the GSTN portal, and this basically means the goods and services identification number, which every individual or a person here or a dealer or a shop person here must apply for, and this is an unique 15-digit number provided by the government here to any registered person or a business entities under the Goods and Service Act of 2017. So, in order to get this GSTN number, there is an application available online, and it has a required details which is been asked which is to be filled by the business entities or the person who has registered under the GST Act 2017. Then the government agencies here, they will have to get themselves registered through the portal which has been available on www.gst.gov.in by filling up the form called GST Registration Form 7 using TAN, that is Tax Deduction Account Number, which will be issued by the Income Tax Department, which means any registered person or business entities who want to obtain the GSTN number, PAN number is mandatory. So, the entire process here is online, where application is signed through PAN, that is Permanent Account Number based DSC. Next issue is method of depositing the TDS. Now, for depositing the TDS, the deductor here, he has to generate the challan, and then he need to make the payment to a bank through electronic mode. Either he can opt net banking or through debit, he can use debit card, credit card, or he can use the online electronic transfers, NEFT and RTGS. Next point is for deduction against the intrastate supply, 1% each to be deposited in the CGST and SGST account heads, and for deduction against the interstate supply, entire 2% amount to be deposited in the IGST account head. So, the next is TDS returns. When you are deducting the TDS, all these points kept in mind while deducting the TDS, and accordingly the TDS return is also important to file and also to submit the statement quarterly. Now, this TDS return here is nothing but it is the quarterly statement here which contains and summarizes all the TDS related transactions which has been made during the specific quarter, and this TDS return consists and comprise of all the details of the tax which has been collected and deposited to the income tax authority by the deductor. You can see the chart which depicts the TDS return forms. Moving on to the next concept, tax collected at source. Tax collected at source is also an important method used in order to collect the payment of tax. Now, this TCS here basically here is being used to collect the tax at the point of selling of goods. Let me give the glimpse of the introduction to TCS. What is tax collected at source? Tax collection at source simply means the amount here or the amount of tax here which has been collected by a seller of specified goods from the buyer at the time of sale, and when over and above the sale amount is collected, that is remitted to the government account. What do you mean by TCS? TCS simply means the tax here which every seller collects from the buyer of any specified goods at the time of receiving the payment or debiting the buyer's account, and between these two you take whichever is earlier. Then section 206C of the Income Tax Act, it governs the goods on which the seller has to collect the tax from the purchaser. Moving on to the classification of the seller and the buyer for the purpose of tax collected at source or for the purpose of collecting the tax. So, there are specific people or the organizations here who have been classified as seller for TCS purpose. Who are those? They are central government, state government, local authority. Statutory corporation, company registered under the Companies Act, partnership firm, cooperative societies, individual or Hindu undivided families liable for tax audit, which comes under the purview of the Income Tax Act in that particular financial year. Continuing the classification of the seller and the buyer for the purpose of TCS. Similarly, the buyer for the specified goods other than the motor car means a person who obtains in any sale by way of auction, tender or any other mode which is being specified, or he might have the right to receive any such goods, but it does not include public sector company and central government. So, continuing the classification here, so it can be state government. So, there are certain sellers here which cannot be included here, that is public sector company, central government, state government, embassy of high commission, consulate and other trade representation of a foreign nation, clubs such as sports club and social clubs, a buyer in the retail sale of such goods purchased by him for personal consumptions. So, these are the gist of the classification of the seller and the buyer for TCS. Now, let me move on to the explanation of what are the provisions relating to TCS. So, section 52 of the CGST Act of 2017 explains the provisions relating to TCS. The first provision is liability to collect the TCS. So, who is liable to collect the TCS? So, in the beginning we discussed that there are certain persons who are made mandatorily to collect the TCS, that is central government, state government or any other authorized organization. Second one, monetary limit of supply. Unlike the TDS, in case of the TCS, there is no monetary limit of supply. The next important provision is rate of TCS. Now, the rate of TCS is notified by the central government, and that rate, it varies from 1% to 2%. The next important provision is registration of e-commerce operator. As said that only the registered person can file the GST here. So, the e-commerce operator, it becomes mandatory here to register under the GST Act. Next, deposit of TCS to government. Now, once the TCS is collected, that is the tax is collected from the relevant sources by the responsible persons, then it is been deposited to the government. The next important provision is filing of monthly statements by e-commerce operator. So, it is a responsibility of the e-commerce operator to file the monthly statements of the tax which has been collected at source. the last provision relating to TCS is filing of monthly and annual statements by ECO, that is e-commerce operator. The e-commerce operator here not only files the monthly statements, but he also files the annual statement which says that as on 31st December, all the statements should be filed by the ECO, that is e-commerce operator. Moving on to give the glimpse of the TCS rates for the year, assessment year 23-24. So, tendu leaves, the tax collected at source is 5%, timber and other forest products it is 2.5%, alcoholic liquor for human consumption it is 1%, scrap 1%, sale of motor vehicle for the value exceeding 10 lakhs it is 1%, foreign remittance of money more than rupees 7 lakhs it is 5%, then sale of overseas it is 5%, and the sale of goods it is 0.1%. Moving on to what is a TCS on sale of goods with effect from 1/10/2020 under section 206 subsection 1H. So, students, you all understood the concept of TCS. So, TCS here is nothing but it is a method used to collect the tax, or the TDS and TCS both are used as a method for the payment of the tax. So, let me explain here the TCS on sale of goods with effect from 1/10/2020. So, in order to widen the scope of the tax, a new subsection, that is 206C subsection 1H is been inserted with effect from 1/10/2020. Now, this section is applicable only in case of the seller where total sales, gross receipts or turnover from the business which is being carried on by him exceeds rupees 10 crores during the financial year immediately preceding the financial year in which the sale is carried out. Continuing the TCS on the sale of goods, the new section which is inserted, TCS is required to be collected from the buyer whose aggregate purchases exceeds rupees 50 lakhs in any previous year, and the TCS on first 50 lakhs is not required to be collected, which means the ceiling limit for the TCS is 50 lakhs. Example, Shreya purchases jewellery from Yash for rupees 7 lakhs. Here, as per the provisions of TCS tax, Shreya would be liable to pay 7,07,000 to Yash, where 7 lakhs for jewellery and TCS rate is 1%. Moving on to what is the applicable rate of TCS under section 206C subsection 1H, which is newly inserted. TCS shall be collected at 0.1% of the amount in excess of rupees 50 lakhs. Second point, if the buyer does not have PAN, that is permanent account number, then the rate would be 1%. Third, TCS rate is being reduced to 0.75%. Moving on to TCS return. So, once the tax has been collected at source, the TCS returns should be filed. Who has to file? The seller has to file the return by filling the form 27EQ on quarterly basis. And there are certain due dates which has been stipulated for TCS return filing. So, following slide shows the TDS TCS due dates for the financial year 23-24. For the first quarter, that is 1st April to 30th June, the last day of the filing is 31st July 2023. Second quarter, 1st July to 30th September, the last date of filing is 31st October 2023. Third quarter for TCS return filing is 1st October to 31st December period. Your last date of filing is 31st January 2024. And for the fourth quarter, the period is commencing from 1st January to 31st March. Your last date of filing is 31st May 2024. So, students, so this is all about the explanation about the TDS and the TCS under the GST law, how the TDS here is being treated under the GST and also the TCS. So, these two are considered as a mechanism. These are considered as a mechanism or the methods here basically which is been notified by the government here in order to collect the tax. So, TDS here basically it will be collected on the purchase of the goods and TCS will be collected on the sale of the goods here. Thank you.